So what happens to your 401k when you retire? Do you leave it with your company? Do you roll it over into an IRA? Do you hand it over to your financial advisor and wipe your hands clean? Or do you watch this video to learn all of your options and make an educated decision that can make a lasting impact on your retirement? The choice is yours, but later in this video, I'm going to reveal a unique IRS loophole that is not only tax and penalty free, but could save your retirement from any potential chaos that could be unleashed onto our economy. All right, you ready to get started? So what are your 401k options for after retirement? Although we're talking about post-retirement 401k moves, most of what we're talking about is just as relevant for those who are still working. Something you'll need to be aware of as a non-retiree is the potential 10% penalty for taking distributions from certain tax-advantaged retirement accounts before age 59 and a half. But the options we're going to look at can be just as relevant to those switching jobs or those who have orphaned 401k accounts with previous employers. Now, if you're wondering where to move your 401k, you may not have to wait until you retire to do so. The easiest option is just to keep your money where it is in your 401k. It shouldn't cost you anything more than you're already paying in expenses, and it saves you the effort of moving the funds elsewhere. The main thing you'll have to worry about, though, is taking your required minimum distributions, or RMDs, when you turn 73. The disadvantages to leaving your money in your 401k are the opportunity cost of doing so. You could potentially be missing out on more lucrative investment opportunities, better diversification, or the ability to invest in a wider array of assets, some of which we'll cover in detail, so stay tuned. Another option once you retire is to start taking distributions from your 401k account. As long as you're at least age 59 and a half, you can take distributions penalty-free. You'll just have to pay taxes on your distributions, and at age 73, you'll need to start taking RMDs. The downside to taking RMDs is that you will be missing out on the opportunity to make even more investment gains. Let's say that you retire at age 62 and you have a nice nest egg built up in your 401k. Taking distributions means that you're missing out on 11 more years of potential investment gains. That's time and money that you may never get back. So what is a Roth IRA and what is a Roth Conversion? You're about to find out. Most people with a 401k account invest in it with pre-tax dollars, but an increasing amount of people are starting to save in Roth 401k accounts, with 28% of workers saving in Roth 401k accounts and 88% of workplace plans offering these Roth accounts. Roth accounts invest with post-tax dollars, but offer the advantage of not having to pay taxes when you take a distribution. That can add up over the years. Even better, for tax year 2024 and later, Roth 401k accounts will no longer be subject to RMDs, meaning you won't be required by law to take distributions. If your 401k plan offers a Roth 401k option, you could move funds from your traditional 401k into a Roth 401k. The downside to that is that you'd have to pay taxes on that conversion. But if you undertake that conversion once you're retired and once your income is lower, you might be able to reduce the tax burden of that conversion. As with all things tax related, you'll want to talk with a tax professional and a financial advisor to see if that makes sense for you and to walk you through the potential pitfalls of a Roth conversion. There's also the possibility of converting your 401k balance into a Roth IRA through a 401k rollover, which we're about to cover right now. This is where things get good. A 401k rollover is a popular option that can help you open up to a greater variety of investment options. When talking about a 401k rollover, it's generally assumed that you're rolling over the funds from a 401k account into an IRA. There are 3 different ways this can happen. Rollover from a 401k to a traditional IRA, rollover from a Roth 401k to a Roth IRA, rollover from a 401k to a Roth IRA, Roth conversion. Note you cannot roll over funds from a Roth 401k into a traditional IRA. Now let's look at the first type of rollover, which is probably the most common and most popular. In this rollover from a 401k to a traditional IRA, you're rolling over funds from a pre-tax funded 401k into a pre-tax funded traditional IRA. As long as the transfer is done directly to your IRA custodian, the rollover occurs tax-free. Told you it'd get good. Now, with a rollover from a Roth 401k to a Roth IRA, you're looking at largely the same rules and regulations with one important addition. Roth IRA accounts are subject to a 5-year holding rule, meaning that while you can withdraw your contributions at any time, you can't withdraw your earnings until you've held the account for 5 years. With a 401k to Roth IRA rollover, which would be a Roth conversion, you'll have to pay taxes on your conversion just as you would if you were to convert your 401k into a Roth 401k. But your money will grow tax-free from that point on. So if it's something that you choose to do, you'll definitely want to consult with your tax advisor before doing so. The question you might have is, why would I want to roll over assets from my 401k into an IRA? Well, for one thing, an IRA account often offers significantly expanded investment options. With many brokerages, IRA accounts can invest in thousands of individual stocks, exchange-traded funds or ETFs, mutual funds, bonds, and other financial instruments. Compare that to your 401k, which limits you to the options offered by your plan administrator. There's also the fact that you have the option of starting a self-directed IRA and being able to invest in an even wider range of assets. We're talking about real estate, commodities, and one option that is growing in popularity is precious metals like gold and silver. Now, this is where things get interesting, especially if you've been paying attention to the economy in 2023. You know, inflation, bank failures, $32 trillion in national debt, that kind of thing. With a gold IRA, you could potentially protect yourself from all that and more. A gold IRA is a type of self-directed IRA, and it allows you to invest in physical gold coins or bars. Unlike an ETF or gold fund in which you own shares in a fund that owns gold, a gold IRA allows you to actually own the gold coins. You choose the coins you want to buy. They're stored at a bullion depository and managed by your gold IRA custodian. And when you take a distribution, you can take it in either cash or in gold. Thousands of Americans have already taken advantage of this opportunity to start a gold IRA and protect their existing tax-advantaged assets. With a 401k to IRA rollover, it can be quite simple to roll over funds from a 401k into a gold IRA. And thanks to a unique IRS loophole, you can do this tax and penalty free. That's right, this little known rule could be your golden ticket to a financially secure retirement, and this is your chance to learn more about making that happen. Precious metals like gold and silver have many benefits that make them a great choice for protecting your savings. They're a hedge against inflation and market chaos. They could protect your wealth in a world where the government is increasing the power of the IRS and looking to institute a digital dollar. Gold and silver have been a proven store of value for thousands of years. This is why it could be a wise move to learn more about diversifying your money with gold and silver now that you're depending on that money to get you through retirement. If you're looking to move your 401k after retirement and gold is something you've thought about, maybe it's time to look into a gold IRA. With the ability to perform a tax-free rollover from a 401k account into a gold IRA, you don't have to worry about incurring taxes and penalties when protecting your assets with gold. Goldco has helped thousands of satisfied customers and made more than $2 billion in precious metals placements. They have the experience and the devotion to customer service that have made them one of the most trusted names in the precious metals industry. Right now, they're offering a free wealth protection kit to arm you with every bit of knowledge you need to know to make the right decision. To get your free wealth protection kit, simply click on the link below or give Goldco a call today.